Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today. And if you're new here, every Saturday we start off the weekend right by breaking down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. I actually spilled mine today. That being said, in today's episode, we've got the latest BTC all-time high price updates, Ethereum 2.0, Cardano, and our usual 404 logic not found segment, plus a whole lot more. So make sure that you stick around. But before we get into all of that, let's kick it off with questions from you, the amazing folks who watch my channel. So I'm going to go ahead and pull those up now. But if you want one of your questions answered, make sure you leave them in the comments down below or tweet me at Hashoshi4. If you would be so inclined as well, please do hit the subscribe button and hit the bell notification button next to it so you can get a heads up whenever I post new content here on the channel. And with that, let's dive into these questions. I just got to go get my iPad. Now, the very first question of the day is from Lars Blunderwurst. Is there a difference between yield farming and crypto staking, or are they just the same thing with two different names? So this is a really good question. Now, yield farming and staking are different, but subtly they all are, the goal is the same, right? You want to earn yield or you want to earn rewards for performing an action that's important to a given protocol. In the case of yield farming, you're really contributing to a DeFi ecosystem, a lending ecosystem most of the time, where you are contributing cryptocurrency as collateral in a liquidity pool, right? You're providing liquidity to a protocol that then is used to lend out of that liquidity pool to others, which then subsequently earns fees, which you get yield from. So basically you contribute your crypto assets to a liquidity pool that's used to perform some sort of DeFi service or provide some sort of DeFi service, and then you earn yield in return. You can actually earn quite a bit more yield in terms of your contributions in cryptocurrency from yield farming in a shorter amount of time, but of course it does introduce more risk. Now, staking, on the other hand, is a means by which you can participate in a network consensus or in network governance. And usually the rewards are a little bit lower, more stable, more static. And most of the time, staking rewards either take the form of you getting rewarded for staking to a delegator, or delegating your stake, to a block maker, and you get rewards for that, or you get rewards for becoming a block maker in your own right by then, of course, staking and earning the right to make blocks with your stake. And so there are different ways that staking and staking and incentive systems are built on protocols, but that largely is the way that it works. So there is a difference, but they are very similar. Hopefully that answers your question, and thank you so much. Now, the second question of the day is from Chris Bit. Hi, Hashoshi, great video. Thank you so much. Can we get some coverage in some of these Bitcoin 2021 projections? Why are so many folks calling 2021 the year for crypto? Personally, I think it's still not ready. This is a good question. I think the Bitcoin prediction space in general, and that's on YouTube, that's on Twitter, that's on basically any platform where someone can issue their opinion, I think they're highly varied. You have a lot of people that say it's worthless, it's going to zero. Obviously that, in my opinion, is wrong. But you have a lot more people now, especially right now with the bullishness that's going on, saying that we're going to see 100K or we're going to see 1 million per Bitcoin. I think all of that's a little crazy. I think people always get ahead of themselves in terms of excitement during these periods of time when everyone just really believes in what's going on. I do think that 2021 will be the year of crypto, not necessarily in the sense that prices go to 100K, 300K, whatever. Not everything's going to 100x, but I think that the reality is that it's going to be the year where these smart contract and dApp platforms finally duke it out for market share, right? You're going to see Algorand, Cardano, Tezos to an extent, Elrond, all of these projects and protocols, including the interoperability ones like Cosmos and Polkadot, they're going to start really, really fighting for that precious market share, the users, the devs, the trading volume, all of that stuff. It's going to be done in 2021 as these projects start to round out their roadmap features and deliver them to mainnet. So yes, in a sense, 2021 is going to be the year for crypto to really break out, but I don't think that means that this is the final pinnacle of what crypto can achieve. It's going to take a lot longer, and like you said, lots of work to be done. We're still early days. Thanks for your question. Question from Orvilio Favieres. I'm sorry if I mispronounced your name. Great video like always. Thanks so much. Which camera and mic do you use? I figured I'd pick this up because I get this question a lot. A lot of people are curious, and I'll make it quick. I use a Canon EOS R. Love Canon cameras. And I just got a new mic, but I was using a $60 mic before. It was a Movo microphone from Amazon, but now I'm using a Shure SM7B, which I really like. I'm still learning how to use it exactly, but really cool. And yeah, I think you can start YouTube with just your phone and a cheap mic. And that's what I did for the first 2 years of my channel, and I've only slowly upgraded my equipment. And got this question here from Vinith Chagi. I've been a subscriber for you for a long time, thanks so much, but I still don't get anything whatever you tell. Please tell me, how do I gain knowledge on crypto? And I picked this question not to draw attention to the fact that someone does not understand what's being said. That's totally fine. It's actually something that's really important for people that are in a place to make content like myself to know what's landing well, what's not. I think I really wanted to draw attention to this question because a lot of new people are coming into the space and they're looking for introductory level content, 101 level content that can help them understand quickly what the heck is going on. Things like, what is Bitcoin? How does Bitcoin work? Why is Bitcoin important? And I think that there's some videos on my channel that really help, drive those points home. I have a question about, why is Bitcoin valuable? Why would I want to own one Bitcoin? Things like that. Understanding the economics of Bitcoin. I think those are some of the things that people really need to know about. But they're also great resources. I really like blockgeeks.com. Also, Andreas Antonopoulos has an amazing book about Bitcoin and blockchain and in general the space at large, and it's tons and tons of videos online. And there's so much good content on YouTube about the fundamental stuff. What I would recommend is spending a couple days going back to the bare building blocks, pun intended, blockchain, and really learning the fundamentals, and then coming back to some of these cryptocurrency things that are really cutting edge, right? Like DeFi and flash loans and all this complicated stuff. I think once you go and get those fundamentals, everything starts to make a little bit more sense. But of course, really remember that you should take your time. I do this every day. I do this for a living. I do this for a side hustle. Crypto and blockchain is my entire life, and I still find it difficult to keep up with everything and learn everything and absorb everything. People ask me in comments, what do you think of this project? Most of the time, I've never heard of it because it's impossible to know everything. So just be patient with yourself and realize there's a lot to know and just chip away at it piece by piece. So thank you so much for your questions today. That's going to do it for the questions. But let's go ahead and dive into the news section of the video. Now, it is unfortunate that I even have to say this, but right off the bat, I want to warn everyone of the increasingly pervasive scammers flooding all of my social channels. On every video, copycat YouTube accounts that take my name and my profile picture and they basically pretend to be me. They go and reply to your legitimate comments to get you to contact them on WhatsApp or Instagram, or to message them, or just to simply post about a cryptocurrency as an advertisement. And I want you to know that these are not me. So please report any of these that you might get. Now, most comments that I do respond to, I also heart, which is a function that only the real me has on this channel. So if you don't see a heart and you see a reply, approach it with some skepticism. And secondly, my name is highlighted when I reply, and I'll show you what that looks like here. So you will always know that it's me. If you don't see that name highlighted, even though if it looks like me, it probably isn't. So please keep your wits about you, and know that I will never comment or contact you to contact me about an opportunity or anything like that. So thanks in advance. And also, for those of you who are new here, every week in partnership with the folks over at Cobo, I'll be giving away a Cobo Tablet steel seed phrase backup device in every episode from here on out. So all you got to do to enter the random draw is to comment on the video, and I'll pick a winner every single week. And just for transparency, this product is only available in the US, Canada, and Europe. So if you win and you're from another region, I'm just going to send you some Bitcoin instead. And the winner of last week's random draw giveaway for the Cobo Tablet steel phrase backup device is here on the screen. So big congratulations to you. And of course, I will be in touch. Now, as we always do, let's go ahead and start the day off with some Bitcoin price analysis and news. Now, first and foremost, this has been the crypto over coffee that I've been waiting for 3 years now. We're 45 episodes in, and we finally broke Bitcoin's last all-time high price from 2017, blasting through the 20K resistance that we've been seeing for the last several weeks, and we rode that inertia all the way up to peaks of 24,000 US dollars per Bitcoin. Now, for those of you who have been here for a long time, in crypto for a long time, particularly through the last 3 years of crappy markets, I salute you. This is vindication for your decision to stay in the game and stay invested in crypto. And this also means that anyone who bought Bitcoin during the 2017 bull rush, even if they bought at the top, which many people did, you're now in profit. So congratulations if you held on for this long. But what I think everyone would like to know is why this happened and why now? Why did we break all-time highs? Well, historically, the November and December timeframe has been accompanied by big price movement, and that's no secret. In 2017, the story was largely the same. For me, I think that the catalyst for this move, though, is the influx of money from institutional investors and other huge players, big companies included, and they're moving out of the traditional markets and into alternatives like cryptocurrency, and specifically Bitcoin as a store of value or a shelter from inflation and currency debasement, which is happening all the time now in many countries. Now, the next stimulus, in the US at least, is brewing, and Bitcoin has been gathering steam for months. And I think that this was the catalyst moment, the blow off the top moment that we were finally waiting for. Now, the second question I think is on everyone's mind, and that is, how far could this go up before we see major resistance? Now, I will say this with absolute certainty and conviction that I know only one thing. I don't have the faintest idea of where prices are going. And neither does anyone else. That's the reality. Anyone that tells you they know where the price is going might be right a few times, but not every time. And it's really hard to tell where things go from here, and a move in either direction seems equally likely. We'll have to wait and see, but just enjoy these amazing prices and the monumental occasion that we saw here in December of 2020. In other news, Ethereum 2.0 is continuing its first phase success, albeit still in a very nascent state, so it's not done yet. But with continued growth in its population of participants in the network that are participating in staking and validation using the new proof of stake network architecture, things are looking good. Now, as of recording this video, there is nearly $1 billion worth, and that's $1 billion with a B, of Ether locked up in the network staking mechanism, putting Ethereum fourth in the overall ranking of total value locked amongst the major proof of stake networks out there. Now, this illustrates why I have refused to rule out Ethereum from the list of future juggernauts in the crypto space, because even when they're behind the 8 ball and they're delivering slowly, things aren't going well, they still garner a massive amount of participation and value in pretty much everything that they do and that they release. Now, within 6 weeks of release, 6 weeks of launch, on a network that is far from complete with almost no utility, there's almost $1 billion locked up in Ethereum 2.0. And what does that tell you? It tells you that there's a lot of people and a lot of value behind Ethereum 2.0 that believe in it and will use it whenever it does come to fruition. It also means that some of the competitors that claim to be Ethereum killers are in fact not doing such a good job of killing Ethereum after all, at least not yet, because within 6 weeks of launch, Ethereum has already blown past many of these projects who marketed themselves as Ethereum killers on the total value locked metric, which is important for the security of proof of stake. The more participants there are, largely, the better off you are in terms of value locked up. It's important to the security model. Of course, there are other metrics to compare, which Ethereum 2.0 would surely stack up differently against these other projects, to be fair. My main point here is not that Ethereum 2.0 is the best, but my point is that anyone writing off Ethereum right now fails to understand the massive community and loyalty there is to the protocol out in the market. Don't underestimate that. There are great competitors out there, but Ethereum is far from dead, and it will coexist with these challengers that are coming up that succeed. Shifting gears though, one of my most favorite projects that helps improve the decentralized application experience is the Graph Network, and they just officially went live in mainnet. Now, the Graph took inspiration from the very efficient GraphQL query manipulation language, and they provide this fantastic and highly accessible data layer on top of public blockchain networks. And this layer exposes on-chain data in an easily queryable API layer or application programming interface layer. For me personally, I've long suffered at the hands of the poor query options that there are within dApps on Ethereum, for example, because what's efficient in terms of data structure to write data to and store data in a smart contract often doesn't equate to efficient queryability later when I want to get data out. And to make matters worse, there are little to no options for richer queries that could serve a larger user application directly, especially in a good user experience fashion. Now, this is where the graph comes into play because it provides this abstraction layer, almost a middleware, that aggregates on-chain data from smart contracts into a true data layer that can be queried to populate user interfaces and applications with ease, much like they would be in any other web app. Of course, the graph does this without sacrificing the decentralized, trustless ethos of the space at large. And this is why popular applications like Uniswap, Aave, and CoinGecko have been taking advantage of the graph's network's services already. And this is one of my favorite tools out there in the decentralized application space by a long shot, and I'm really excited for what they're going to do in the years to come. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm robots that control how well people do on this major channel thing here, please do hit that like button and get subscribed because it tells the YouTube robots that you're enjoying the content and other people might do the same. So thank you so much for that in advance. Now, today's absence of logic is brought to you by Rosenberg Research and Associates. Just kidding. There is no affiliation whatsoever. That was a joke. But jokes aside, the president and chief economist at Rosenberg Research and Associates, Dave Rosenberg, publicly lambasted Bitcoin's supply constraint property in a Bloomberg interview, implying that it is in fact not limited to 21 million in maximum supply. He said, and I quote, "Everybody seems to believe that we're going to get to that 21 million cap on the supply constraint, but there's really nothing in the protocol to suggest that the supply of Bitcoin can't go up once we hit that limit." And then he went on to say later in that interview about gold, "The one thing we do know about gold is we know the supply curve of gold with certainty." And that's another quote. And there is, needless to say, so much wrong with this, I don't even know where to begin. But if I had to begin, first of all, Mr. Rosenberg might want to remove research from his company's name, because this really seems to be a take with little to no research behind it. Let me show you how easy it is to illustrate the protocol-enforced 21 million Bitcoin supply cap that will exist as long as Bitcoin Core exists. Let's head over to GitHub real quick, and I can time it to show you how fast it is to find and prove this and verify this. You can go into the Bitcoin Core source code, you can find the exact place where the supply cap is defined, and then take a moment just to contemplate and understand how the protocol itself is enforced. And then you realize, in fact, there is a hard supply cap that is known and that is transparent and that is predictable. Now, that's just the first error in this whole entire thing that came out on Bloomberg. In my opinion, just another instance where there's an apparent lack of understanding of the actual technology and the inner workings of Bitcoin that's driving false narratives like this. And this is not the first time. Now let's just touch on the gold comment for a second as well. And I like gold, mind you. I think it's a great investment personally, and that is not financial advice. But the idea that gold's supply curve is certain, quote unquote, is a comical thing to say at best. Our understanding of the total supply of gold is limited to our capacity for exploration to find it, mine it, and refine it. Until we have, with 100% certainty, left no stone or piece of dirt untouched on this entire earth, to find every ounce of gold possible and then expand into the solar system, we do not know what the supply curve will realistically be for gold beyond our expectations and trends. We do have trends and a formula for the expected supply growth of gold based on those trends in history, but those are not representative of the true total supply of gold and are subject to major outlier events. If, for example, tomorrow a new mining technology is developed that gives us access to literal tons of gold that we could not access, find, or mine before, then what? The supply changes, the curve changes. Furthermore, what if immense amounts of gold did come to exist, but big corporations and governments hid it and held it out of supply to keep prices propped up? Both of those scenarios do not apply the same way to Bitcoin. Bitcoin's supply is transparent, it's easy to validate, it's in code. Gold's is not. All in all, I wish nothing but the best for Dave Rosenberg, but I would like to implore him to take some time, just a little bit of time, to truly understand Bitcoin and its protocol before casting such a generally false attack against it. 404, logic not found. Now, in last week's episode of Crypto Over Coffee, thank you to anyone who watched it, we talked about Gods Unchained, the awesome blockchain-based online game that allows players to truly own their in-game items in the form of tokens to trade and use at will, so true ownership of your in-game items. Many of you have responded and commented that you're enjoying the game, which is awesome to hear because I think it's such a fun game. But that said, I wanted to talk about how the work behind the game to make it truly scalable and efficient for users to use tokens as in-game items is really going. Now, one of the big pieces of this puzzle for scalable gaming on the blockchain backed by tokens is Immutable X, which is a soon-to-be-released mint and exchange protocol on top of Ethereum that is focused squarely on making token-backed gaming super fast and cost-efficient for large numbers of players. Immutable X's system is a layer 2 protocol that allows for highly efficient batch minting of various token types with zero gas fees and instantaneous exchangeability in-game. And then on the flip side of that process, the protocol allows for up to 9,000 transactions per second with free peer-to-peer trading of assets between users. Now, these operations might sound a little bit too good to be true, but they are backed by Ethereum's security model underneath the hood, as transactions that happen in this Immutable X Layer 2 are rolled up using ZK rollup technology and validated on the Ethereum mainnet in batches. This scaling solution is similar to those that are used in Ethereum 2.0, or at least that are going to be used in Ethereum 2.0 to help scale to these better numbers for transaction throughput. Now, this protocol is targeted towards developers of games that will use tokens, specifically in the Ethereum ecosystem for now, and it will usher in yet another powerful option for games to grab market share in the blockchain space, which I think in 2021 and beyond is going to be one of the major arbiters for adoption in crypto. So I'm beyond excited to see what happens as Q1 2021 launch time nears for Immutable X, and Gods Unchained that we talked about last week is a major player betting on Immutable X's protocol for their own game. Now, if you want to read more about the scaling solutions that we discussed in this in a very simplified manner here, I'll leave the link down below for a little bit more detailed reading. Now, for fans of Cardano, the good news seems to keep on rolling in 2020, because this week the KEVM, the K-Framework Ethereum Virtual Machine, was just announced for full launch in 2021. Now, the KEVM is a modified version of the Ethereum Virtual Machine, or EVM, that allows the Solidity smart contract programming language native to Ethereum to be compiled to a lower level language, bytecode, and then executed in the scope of the blockchain network for decentralized applications. This was one of the bread and butter features of Ethereum that has made it so successful. But what does this all mean in general? In short, it means that smart contracts written in Solidity for Ethereum will soon be natively executable on the Cardano blockchain. This is significant because it gives yet another path for developers to build out their applications in a scalable environment, as Ethereum's proof of work network that we have today has often struggled to keep up with the load and demand for transaction space in blocks. Now, I will say this though. For all the time that's been spent on the Plutus language, which is native to Cardano, it's the language that was built for Cardano, I think the focus should remain on that language, and maybe even WebAssembly to use other high-level languages for smart contracts rather than just Solidity. But in addition to that news, the Wolfram Blockchain Labs, or WBL, subsidiary of the tech mainstay company Wolfram Alpha, is also partnering with IOHK to formally create business-focused dApps and Oracle technology backed by Wolfram's tech stack. And they will also be creating content for those interested in building on and understanding the inner workings of Cardano. And this is even bigger news in my book, because you obviously need developers to know what they're doing to build cool things. Oh, and one last thing. Last week I shouted out Digital Asset News' stake pool on Cardano, but I forgot to mention the correct ticker symbol is DNEWS, DNEWS. So my apologies for that. I just wanted to fix my mistake. And in other news, the DeFi project that serves up decentralized lending Warp Finance was just caught in the middle of a big flash loan exploit event that saw an attacker make away with what is reported to be as much as $8 million in crypto. Now, this is still developing, so the details might change. It might be less, it might be more, it's hard to say. But in a very simplified manner, this exploit seems to, as of now, have been carried out in a similar way to the other flash loan attacks that we've seen in the past, where the attacker uses other protocols in the DeFi space to get loans in crypto, which are then used to mint liquidity pool tokens on a given protocol, in this case Warp, and then they use those collateralized tokens to withdraw genuine cryptocurrencies. They're basically using stuff that they've taken from other lending material to withdraw genuine crypto. In this case, it was stablecoins. Now, the problem with these protocols in DeFi is that they have adequate security and isolation most of the time, right? In isolation, that's the key. But when you start to explore the attack vectors that are opened and derived from the native coexistence of other protocols that are almost weaponized against each other, it becomes very hard to predict and close all of those attack vectors, because quite frankly, protocol design is not easy. Warp Finance had completed a full security audit of their smart contracts. Take that in. They were audited, fully audited, but they still got hacked because of the design of the lending protocol itself. Their code was right. Their code was secure, but the protocol itself was flawed. Please, I'm just telling you this because if you're in DeFi, remember that this is the Wild West, and simply seeing an audit, a security audit by a third party, doesn't mean nothing bad can happen. So that is just something to keep in mind. It's not 100% safe no matter where you are. Just be careful. Ladies and gentlemen, that's going to do it for today's episode of Crypto Over Coffee. If you have some time to stick around, please do check out this video right here. I'll link it up on the screen for you to learn about some of the other altcoin projects that I'm stoked about going into 2021. But I want to thank you as always for watching regardless of that, and I'm wishing you and your family a very happy holidays. And until next time, cheers.